Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. It's Wednesday. What do we got going on in the stock market? Well, the NASDAQ is down about 100 and the Dow's up about 50, so nothing dramatic. But we've had that historic run last week. I think the markets went up about 6% in a week, which is a really big move, right? But that was mostly in the Dow Jones Industrial Average. The NASDAQ didn't really participate that much. See, the Dow, it's been on a tear straight up, but the NASDAQ's not participating. Usually the NASDAQ is the one leading, right? So I don't know. I smell something funny about this rally. I don't think it's going to last much longer. Now, I know we're coming into that strong time of year, the holiday season, where markets tend to drift up into the end of the year. I don't think we're going to get that right now. Now, we may get that down at the very end of the year, but I think we're going to get this pullback first. Now, why do I think that? Well, the SPY, 80% of the stocks in the SPY are above their 50-day moving average. Now, if you go to this symbol right here, $BPSPX, you can look at this and you can see that it's above 75. Now, it's been above 75 4 times this year. And each time it's been above 75, we've had an immediate drawdown in the stock market. Some as much as 600 points or 900 points on the SPY. Now, I think we're going to get this drawdown again. And I think it's going to start this week, either today, tomorrow, the next day. I don't know, but I think it's going to be really soon. Look, if you're in the stock market long, just be careful here. That's all I want you to know. We've had this big run up and it might be time to take some off the table. That's my opinion that we're going to come back down. We'll see how that plays out. Now, let's move over to the real estate market. Now, the real estate market's kind of been bothering me. Now, I'm a real estate broker and I keep hearing this sound. I don't know if you hear this sound, but it's this giant sucking sound coming out of the real estate market, coming out of the housing market. Giant sucking sound. I don't know what it could be. At first I thought it was just the equity being sucked out. Now, we have sucked out $1.8 trillion of home equity just this year out of the U.S. housing market, $1.8 trillion. But then I got to thinking about it. I mean, that's really not that much, right? It's just getting started. I mean, you can talk about the crypto market. It's had over $2 trillion. Housing market only $1.8 trillion. You can talk about Amazon. It's already had $1 trillion. That's just one stock. Throw in Facebook and you got another 800 billion. That's 1.8 trillion. So this 1.8 trillion that we lost in the housing market so far, it's just getting started. That's not the sucking sound I'm hearing. The sucking sound, I finally figured out what it is. This giant sucking sound is coming out of the housing market. Now, what is it? It's the investor. The investor, they're running for the exit. They're running for the exits. Now, let me explain what I'm talking about. Now, you got companies like BlackRock and Blackstone. Let's take Blackstone, for example. I think they got $70 billion involved in the real estate market, right? Now, what they got, it's not their money. They don't have $70 billion. What they do is it's like a hedge fund. They put it together and people invest it into the market. Now, people that are having margin calls, there's margin calls in the crypto market. There's margin calls going on in the stock market for a lot of people. They need their money back out of the fund. Well, the fund was having so much redemptions that they're only allowing 20% to be pulled out. So it'll take you per year. It'll take you 5 years to get your money out of those funds. Now, those funds are invested in the housing market. People want their money back. And so they're withdrawing the 20% that they can take out. And this is creating that sound. Investors, they got to sell these houses to raise the money so investors can take the money out of these funds that they invest in. You see, it's not their money. Now, we also get this in the apartment buildings. A lot of apartment buildings are what's called syndicated. You could look at Grant Cardone's program. I think he takes 10% of the profit when he buys the apartment. He gets 10% on the back end when he sells the apartment, and he takes 30% if the apartment and went up. But you can't get your money out of his fund. Once he's got your money, you're locked in for 5 years. People want their money back, and people are arguing they want their money back. So you get this sucking sound out of the syndications. Maybe some syndications allow you to be bought out. Okay, so this money wants to come out of the investor market. Now, why does it want to come out? Well, we got the rates. We went up from 3% to 7%. So your average person can just get 4% on a regular bond. So they want to put their money into something that they feel safe, like a regular bond, right? Well, what else do they want out of this housing market? Well, they see rents. Rents are starting to come down. Now, they've been going down for only 3 months, just getting started on the rents coming down. But just the apartment rents, think about that. They had the worst rental quarter, the third quarter, they had the worst quarter in 30 years. Nobody wants to rent apartments at these ridiculously, horrendously high prices. So they can't get the apartments leased. So what are they doing? Well, they're dropping the rents. They're adding incentives. Get 2 months free rent just to get you into the apartment. But they can't get them rented, so a lot of them are sitting vacant, right? And the new apartments are coming on. There's 1 million units in multifamily coming onto the marketplace. Now, 450,000 of those units will be on into next year, and then the rest a year after that. That's 1 million new units when rents are coming down. This is a very difficult time for if you're an apartment owner, because the rents are going to be coming down and your investment's not going to return what you thought it was going to return. Now, we also got this funny thing. This is so fun. This cracks me up, right? So Biden, no offense to Biden, but his administration, they're talking about national rent control. They want to have rent control on a national basis, saying you can only raise the rent at the cost of inflation. Now, what is this going to do to landlords? They're going to run for the exit. There's not going to be anywhere to rent because there's not going to be any landlords left to rent from. Well, that's just my take on that. Maybe you think the rent control is a good thing. I think it's a terrible thing. Free markets will balance themselves out. They're doing that now. Rents are going down because they've broken the rental market. They can't get these high rents. People don't have the money. They just plain flat out don't have the money. Now, I want to talk about in my area. I know in your area rents are still going up and house prices are still going up, but here's what's going on in my area. All right, this is just on my street. Now, my next door neighbor, they both work at Facebook, and they went and bought a McMansion, right? But, they instead of selling their house next door, they decided it was smarter to rent it out. Now, maybe for them, that's the right thing to do, right? But on my street, there's no house that sells below $2 million. They went up to 2.5, and they're about 2.2 right now. They're coming back down. So they were at 2.5 million, and now they're about 2.2. But let's just use round numbers. $2 million, right? So they rent the house next door. They could sell in a heartbeat. They could sell it, this weekend, because they'd be 200,000 under the market. If they wanted 2.2, they're probably not going to sell it real fast. But if they wanted $2 million, 200,000 below what the current market is, they could sell it. They could get their $2 million in their pocket. But instead, they got it rented out. Now, what is a $2 million house rent for? Well, I know because I know my next door neighbors. It's $5,000 a month. $5,000 a month. Okay, so they pay $60,000 a year to rent the property. Okay, now the landlord, well, they got $25,000 in property taxes, so you got to deduct that from the $60,000. They deduct the $25,000. And they get $35,000. Now, if you just sold the house and got your $2 million, right? You got $2 million to invest now, and you put it into bonds at 4%. Well, that would get you $80,000. 80,000. They're getting 35,000. They got the headaches of fixing the roof, fixing the plumbing, fixing everything that breaks in the house. Okay, that's a headache, right? And managing the tenant. Maybe the tenant decides not to pay them and they have to go through an eviction process. I don't think that would be good. But look, if they could get 80,000, they're only getting 60,000, but it's worse than that. That's a negative 20,000, but they got to pay their property taxes of 25,000. Okay, so they're out about 45 to 50,000 $50,000 a year when you count maintenance and insurance on the house. All right, so they're losing $50,000 a year. If they sold it now, they could put that money into bonds, put it into a 30-year bond if you want. I think you'd be crazy, right? But you could. I mean, the 1 day is paying about the same as the 30-day on the bonds. That just tells you that we got a big recession coming, and it will come really soon. But okay, so that's a problem, right? Now let's say that our new homes going to come on the market for rent? Well, right now we got 105 million homes in the U.S. total, single family. These are single family. And we got 28 million of them are owned by investors that rent them out. Okay. Well, our new home's going to come on the market for rent. Now, your area is going to be much different. My area prices are ludicrous. They're insane. I live right next to Apple Computer. So people that work at Apple Computer pay these ridiculous prices. I don't get it myself, but that's what the market's going. So, okay, let's say you come in and you want to invest in real estate. You want to buy a rental property and you find this deal that's $200,000 below the market. Market's 2.2. You find this deal for $2 million. All right, but you're going to finance it, right? You're going to finance it with 7% money. All right. So you're now, what is that? About $140,000 a year just for your mortgage payment. That's not your property tax. Let's throw that on there. Let's throw another $25,000. So you're at $165,000 for this house. Well, you'd have to rent it for about $15,000 a month, but you wouldn't be able to rent the place because no tenant can afford $15,000. So you get the market rents, which was about $5,000 a month, and you get $60,000, but you're paying out $145,000. That's a lot of money, right? You're losing about $100,000 a year if you're a new landlord in my area. Now, I know your area is different, and your area, you buy a house at $1 million and you rent it for $10,000 a month, and everybody's happy with all the numbers work out, right? Well, no, it doesn't work that way. The rental market's broken. Rents are going down. Landlords, this is the giant sucking sound I'm hearing. They're running for the exits. They want out. They want out as fast as they can get out. They want their money back from these hedge funds. They want their money back from these syndications. Don't do syndications. If you're going to buy a place and invest in real estate, just do it yourself. The syndication takes 10% on the front end, 10% on the back end, 30% of the profits. They get half the money for doing nothing. Your money's all at risk. Your neck is on the line, right? Your neck is the chopping block. But anyways, this is the little thing that's going on in the rental market right now. And that giant sucking sound I'm hearing, I don't think it's going to stop anytime soon. 28 million houses that they want to get out of as fast as possible. Let's say they just want out of 10% of them. Let's call it 3 million. 3 million houses coming onto the marketplace. House prices are going to be circling the drain. They're going to go much lower. It's going to be a complete flush when these investors realize what's going on. When my next door neighbor realizes that they're losing $50,000 a year minimum, maybe losing as much as $100,000, they're going to be running to sell that house. Now, maybe they aren't that smart yet, but they'll wake up. Investors will wake up. House prices will go down. That's just my take. I'm Tall Mike. Get out there, everybody. It's a Wednesday. Have a great Wednesday. Don't forget, give me the thumbs up if you like it. Hit the subscribe button because on Friday I'm going to talk to you again. And I got some interesting stuff to go over. You don't want to miss it. Bye-bye now.